Good evening, everybody. Welcome to the market strategy session for the week of December 7th, 2015. Today, of course, is December 6th, 2015. And happy Hanukkah to everyone who's celebrating. And even if you're not celebrating, here's some news for you. Happy Hanukkah anyway. So, Hanukkah is the festival of lights, and it's a wonderful time of year. It is holiday season. My kids celebrate both. And by celebrate means they get gifts. It's about as far as the celebration goes. But I do say the brachas, and I do let the children usually light the candles. But today I lit the candle by accident, and we had it the wrong way in the menorah. We could do it over again, but we'll just pick it up tomorrow with the second night. Anyway, happy Hanukkah if you're celebrating. Let's take a look at the economic reports that are due out this week. On Monday, we have the Eurogroup meetings. On Tuesday, we have the ECOFIN meetings. JOLTS job openings at 10 o'clock. Crude oil inventories on Wednesday. Unemployment claims on Thursday. And the German BUBA president, Weidmann, he speaks at 1 p.m. On Friday, retail sales, PPI, core retail sales, core PPI. That's all pre-market, though. What's important is the preliminary University of Michigan consumer sentiment at 10 o'clock, because if you're day trading and you're in a trade or you're watching what's going on, you want to just be careful around that time, of course. That's why anything in red or orange, I always want to pay attention to, but I really want to pay attention to them if I am about to initiate a trade or if I'm in a trade and what my stops are doing. And that's, of course, if you're a day trader. If you're swing trading, it's highly unlikely that you're going to be affected by those intraday fluctuations due to the economic reports. Now, last week in the market was an interesting, right here you can see we're down $2, right, in the futures heading in. But last week was an interesting week because Wednesday and Thursday saw a nice little downdraft here. Okay, you can see Wednesday and then even Thursday we got below the 200-day moving average. But Friday, after the job numbers were reported, we gapped and kept going, and it was a pretty decent day. Nearly 2% gain. Got back everything we were down Friday, plus half of, everything we were down Thursday, plus half of Wednesday. On the week where we formed the doji. My opinion, and Paul will have to expand on this, what he thinks, but I don't see any damage last week. I don't think anything happened that was damaging to the Bulls' case. I believe that the bull market is still intact. I believe we're going to all-time highs from here. Could it happen this week? Yeah, no, it's whatever it is, 4% move, less than a 4% move here. But by the end of the year, we should be at new highs. The NASDAQ has a shot of making it also because NASDAQ 100 is only about 5% away. So they have a shot of making it also. Now, the Russell and the mid-caps, they have more work to do. They have about a 9 and a 10% move, respectfully, to go. So they may not make it to new highs by the end of this year. But if the Russell does get off its butt and gets through that 200-day moving average, it'll really give me at least the confidence, and probably other bulls the confidence, that we could really get a nice move higher here into the end of the year. Right now with the Russell lagging, and this is the time of the year when the small caps usually outperform, but the fact that they're lagging now, it's not really cause for worry, but you just like to see things doing what they're quote unquote supposed to do. I mean, I put that in quotes because, look, the market does what it wants to do, and it's supposed to do what it does. Okay? So anyway, that's it. I'm going to turn it over to Paul, and you have a great week. Paul, just text me when you're done, okay? It looks like you could see the questions now, unlike the past, right? He's not answering, so I don't know.
Okay, I am here.
Can you see the questions without me changing anything?
Yeah, it's because I log in differently now.
Very good. All right. Text me when you're done.
Okay. Okay. Mine was mixed. A very good friend of mine unfortunately passed away on Thursday after a very long bout of illness, so that's not exactly fun. But as they keep saying, at least he's not suffering anymore. So that was that. And I'll just finish setting this up. And we went to a bat mitzvah in Boston of a very close family. We drove to Boston from Connecticut Friday night for dinner and drinking at the hotel. And then we had the bat mitzvah and lunch Saturday morning and early afternoon. And then my daughter and I drove from Boston back to Connecticut to go to the UConn women against Notre Dame game. And then we got in the car and drove back to Boston for the nighttime party from the bat mitzvah. And then early this morning, we drove back to Connecticut for my friend's funeral. So and then my daughter a basketball game after that. So a lot of driving, not much sleep, a lot of exhaustion. If I'm punchy or I sound a little crazy, then I'm sorry. A lot of emotions in the last week. So, but thankfully, I don't think there's any more driving this week. All right. So I think we're good to go. Last week, actually, no, let's start with where we are tonight. Futures are down nothing. They're down as we normally see. Nothing going on. Last week, it was certainly interesting if you participated or watching. But if you just fell asleep for the week, look, the market did absolutely nothing. Began the week and ended the week in almost the same spot. So if you just look on a weekly basis, you go, nothing really happened. If I hear Obama in the background, I'm going to throw up. My buddy who passed away, the only was, I don't want to say a friend of Obama, that'd be a gross exaggeration, but my buddy who passed away was the man who created the very first private healthcare insurance exchange in the country. That was his creation. So, whatever. Smart guy. We didn't agree on politics, but that's okay. I still loved him. So, Wednesday was the reversal day. Let's get rid of this crosshair. Wednesday was the reversal day, and it looks really ugly on a chart. Everybody was talking about, me included. These days look really ugly on a chart, especially when they occur at a new high. But when you open and then you just envelop the day before, and then we had big down day on Thursday, follow through. Thursday, my Twitter feed was all a buzz from the bears beating their chest, blah, blah, blah. You know, the jobs number doesn't matter. Market's going down, blah, blah, blah. New bear market, recession, all this nonsense. Well, something happened on the way to recession in the bear market. We had a huge up day on Friday, which for me felt good because I added to longs on Thursday, so that felt really good. Every once in a while, you get one right. But Friday wasn't a great day. I mean, obviously, listen, the Dow was up 212 basis points. So I'm happy because I actually bought the Dow for a change. So that felt really good. But look, breadth was not even 2-1 right there. The trend was neutral. That's not so good. Up down volume 2-1. It should have been 6, 7, 8, 9-1. That not so good. New highs, new lows. Not so good. So Price is the final arbiter. Price looked beautiful on Friday, but the internals were disappointing. And I can't say that I think we're ready to go. I'm still bullish, intermediate, long term. I gotta sneeze. Hold on. Okay, I'm back. Sorry. I'm still bullish, intermediate, long term. Market to me still looks great. That we're going to go much higher. Short term, Friday's rally was less than enthusiastic for me. I would not be shocked if we spent some time digesting Friday, Thursday, and Wednesday, going sideways. Like this. It wouldn't even shock me if we take out last week's high and then pull right back in again. And it won't shock me if we go back towards Friday's low again. So in other words, Paul has no strong conviction in the very short term. Could go anyway. I just don't think we're setting ourselves up for a really big move right now. I do think Santa Claus is coming, but maybe this week is more of a digestive week, consolidation, maybe a pullback. And that's the case in the Dow as well. I will buy into weakness, that's for sure. And if we take out the highs, if we break out first, we'll probably sell some into the breakout and then try to buy into weakness, probably. So the Dow and the S&P look the same. Mid caps look clearly a little bit weaker. I sold my mid caps and I bought the Dow Wednesday and Thursday. So that was okay for my book. But I think, as I said for the last couple of weeks, I kept saying before this move that I thought the mid caps were trading above the November peak and the 200-day moving average. Same thing with the small caps. We traded slightly above the peak. We're not there yet. I do think by the end of the year we're coming up here in the mid caps. And the Russell, same thing. Russell traded above the November peak, which I said it would, and they're getting ready to take out the 200-day moving average, which is coming soon. The 200-day is really flat, as you can see. It's amazing how few people at least that I see, are talking about it anymore. When stocks first go below it, everyone's talking about how important it is. And now that we've gone above it and below it a few times, now it's become meaningless. So it's flat. It's just almost a horizontal line. And the Qs, which look better than everything else on the chart, are but one good opening tomorrow away from new highs. They're much stronger on a price point. But this is the time of year, we're getting to that point actually, where small caps kick it into high gear and outperform the other ones. I have a whole hierarchy that I look at for probably my favorite time of the year to trade, which is December and January. I think we did it in the market timing class where I gave my how I trade in December and January with the major indices. It's got a really good track record, and I will keep playing it until I get proven wrong repeatedly, which every once in a while it's wrong, but overall it does fairly well on a relative basis. So those are the major indices. Here's Europe. Not as good. Again, we talked about this last week and the week before. Could this be some kind of complex bottoming pattern? Sure, it could. What do I think? I don't have a lot of conviction yet. But I did like, as I mentioned a couple weeks ago, the trade of shorting France against a stronger country like Germany. Or was it Germany and Sweden? Not Sweden. Spain. It was not Spain. So it must have been Germany and Germany. EEM, emerging markets. Where are we? Once again, we're in this pattern of the bulls trying to step up in the very short term. I do think this peak will be taken out in the first quarter of next year. So maybe the EEM is going from 34 to 37 or 38 or 39, but I do think this is being taken out. But neither Europe nor the emerging markets are leadership groups now. I still own FXI. It did nothing last week. I'm getting a little bit impatient, and I still own EWH. A little stronger, but still nothing to write home about. Let's see. I know one of you guys likes Russia. So you've got triple top in Russia. 1, 2 with a bearish engulfing pattern, upside down hammer. Triple tops usually are exceeded. Usually. So Russia should. I mean, if I were predisposed to owning Russia, I'd buy it right now. And I'd put a tiny little stop in. If it closes below 16, I'd probably get out. I'm sorry, 15.75 I'd get out. So you're basically giving it 25, 30 cents to get out on a close, which so your risk is defined and it's pretty small. All right, let me just check. Let's see if we have any questions. Johanna wants Italy. Scott wants to know. I mean, Scott, you could say Russia is oversold if you use a 5-day stochastic. That's why some of this technical analysis stuff you could use an indicator to suit your thesis. So if I want to be long, well, here you go. We're oversold on a 5-day basis attack, but on a 14-day basis, we're not there yet. But to me, it's sufficiently oversold to give it a couple of shots down here. Johanna asked about Italy. Yeah, I mean, it looks kind of like the rest. Doesn't look great. And EWQ, I think, is France. They look very similar. Somebody asked about Brazil. So you get a little hammer in Brazil down here. I prefer the hammers to be lower, but that technically is a hammer. Not as powerful as it was, but certainly I think Brazil can go higher. Okay, Jason, move the multicolored block so we can see what's. Okay, let's see, Jason. Jason, is that better? Yep, okay, good. Okay, so let's do our 4 key sectors. Let's start with the semis. We all know the semis are leading, baby. Love to see this. I love to see it because we talked about it for a couple of months. This decline leading to the semis beginning to lead. So the semis are playing out nicely. And there's certainly a shot that they can go right back to par or even higher by the end of the year. There's a shot. Again, for the 4th week in a row, this is their most favorable seasonal time of the year in the semis, right into the middle of January. Let's go to the trannies. Did not have a good week at all. Thursday and Friday, Wednesday and Thursday crushed them. I can't use the word hopeful. That really, this is not about hope. But semis need to get some, the trannies need to step up, okay, and quickly. If they have any chance to take out these highs right away, which I wanted to see happen. But maybe I'm wrong and I'm not looking at it properly. Here's Jets. The airline one, clearly the airlines are the best group in the semis. They're right near an all-time high, and they're probably going higher. Let me see, what is Union Pacific look? That's Norfolk Southern. Wow. So Union Pacific has that big oil play in it that's hurting that part of the trannies. Federal Express, not so great. UPS, fair. Still dealing with this gap. Okay. So we have the semis, the trannies. Consumer discretionary still looks great to me. You could make the case that maybe you have a double top here. But I'm going to give this the benefit of the doubt that we're going to all-time highs right from here in the next couple of weeks. That the discretionary group prints all-time highs. And finally, what did I miss? Oh, the banks. Banks look fine. As I said, I think they're going to 40. Is it by the end of the year? That's a stretch, but not impossible. So 3 out of the 4 key sectors still look pretty good. Software, as we say, week after week after week, looks dynamite. Leadership group, very quiet, but probably the best group on the board. Telecom is doing absolutely nothing. 0, 0, 0. Just boring everybody to death. Diversified financials, they look fine. I like banks better, but they look fine. Retailers, certainly almost every other sector looks better than retailers. They're part of discretionary, but not a good. They're just really trading poorly. So, and now you're square in the middle of tax loss selling season, so got to be on guard for trapdoors that open up from tax loss selling, especially in small caps. Especially home builders, nothing going on there either. Just still amazing. They've been essentially digesting that big crash, the flash crash, since August. Almost exclusively trading within this band. So a big move is coming in home builders. It's just not right now. Industrials still look okay. That strong dollar. Somebody should tell Bob Pisani that strong dollar who says the industrials can't go up. Well, looks like they've done a pretty nice job here. And they're not done. Materials, they also look like they're going to go higher. Looks like we are digesting nicely, and they're getting ready to explode into the upper 40s. Energy and energy services fell out of bed really badly on Wednesday and Thursday. Hung in on Friday in a very strong tape. I don't like that. They just don't look good. And yes, I still own a little piece of each, much to my unhappiness. OIH, that's not the mark of a sector about to explode higher. Let's see. Healthcare. I said last week I thought we'd take out this peak here this year, and I still think so. Big sell-off on Thursday, but there's nothing really wrong here yet. Friday, we gained back everything we lost. Still looks to me like this thing is going into the mid to upper 70s. IBB, the biotech, certainly weaker than healthcare. Does not look bad, just not as good as healthcare looks. On the defensive front, here's what's really interesting. You got staples that look at Friday's moving staples. Looks fantastic, right? Reversal here where I unfortunately sold. And now, boom, huge run on Friday. We're going to threaten all-time highs again. And now you got REITs, which do not look nearly as good as staples, and utilities look like death. So it's hard to foot those three defensive sectors, one looking really good and two not looking good at all. It's almost like the market is, so think about this. It seems like what the market is telling us is staples are rallying because the economy is weakening, and that's a defensive play. But utilities and REITs are going down because the Fed's going to raise rates into a weak economy, which I'm not sure has ever happened, ever, ever, ever. That's all I can really think of, kind of how to rationalize that. GDX, monster day on Friday. This is just not. This is very atypical bottoming in GDX. It's rounded crap. It's just not normal. But a huge day on Friday probably goes higher. My biggest position continues to be the internet's FDN. I'm going to dial it down because that stupid tick. I really want to see the internets make new highs in the next couple of weeks. I don't like this retracement with the potential of it rolling over again. So I want to see this go back to all-time highs, hit 80 by the end of the year for sure. And solar. Let's get out of this. Solar again, it had a nice week when energy did not, so that's good. Again, it's worth a shot here. Keep your stops really tight. Don't let if you lose, don't let this turn into a big loser. I think, did I miss any sectors? I don't think so. All right, let me see about any questions. Johanna asked about Eden. What Eden is. Is this a stock? Johanna, is this a stock? If it is, just email Tiny. He'll cover it for you. Jets is like Russia, but only just made the third top. Jets is like Jets is not. How is Jets like Russia? Jets is essentially at an all-time high, and Russia is kind of buried. So I would not kind of equate them. Jets, in Russia, the Bears have short-term control. Jets, the Bulls have control on every time horizon. Let's see. MLPs, I still own AMJ because it's done so. I gotta get a tissue. There's nothing in my office. Great. I own AMJ as I have for, I think, when did I buy it? 2012. It's a core holding because it's got a big dividend, but it has just been death. Look at on a weekly basis, cut in half, literally, cut right in half. All you could say, there's nothing redeeming about it. All you can say is it's been so hammered. The minute tax law selling abates, the MLPs will begin to go, which could be, but there's nothing redeeming about it now at all. Let's see what else we got. Oh, Eden is Denmark? Oh, okay. I'll pull Eden up again. Mike, I don't know if there is a pattern in the banks. I'm sure there is. I just haven't done any research on it. The semis has a clear pattern from middle October to middle of January. Oh, it does say. That's really funny because before it didn't say Denmark up here. It said nothing. It said Nasdaq. I typed in the symbol wrong, which is always possible with me. So yeah, I mean, so Johanna, to your point, one trade could be into a pullback. You buy Eden and you short France. I just saw some poll out today about the right-wing nationalist party in France had 25, 35% of the vote in a poll, which is shocking because they elected, essentially a communist, a strong socialist who's their president, and he raised taxes and he killed their economy. And now you're literally going about as far away from that as possible with an ultra-nationalist right-wing party. It's crazy. Okay. So let me forge ahead, and I'll come back with questions in a minute. Let's see. Let's start with gold. Here's gold. I mean, for the umpteenth time, nice reversal on Thursday, huge up day on Friday. Smart money is so long gold right now. Last couple of weeks, essentially record longs in gold. Is it going to matter? Eventually it will. Is this the ultimate bottom? I would say no. But in the short intermediate term, you have a beautiful divergence. You have a higher indicator, and you have lower prices. So that's leading to this really nice reversal. Silver, same thing. The bears for a while were getting rejected down under 14. And then boom, big day on Friday in silver. Copper, also the smart money has been locked and loaded long. I don't like this at all. This does not excite me. This behavior. If we fell out of bed, we fall hard. We go down what, 10%, and now we can barely lift our head off the pillow. So I don't love this look in copper. Crude oil, hanging in, but certainly nothing to write home about at all. Has not made a new low yet, but it certainly is trying to fall back under 38. Natty gas. Last week we came back and said worth a shot to the long side again. Anything happened last week? Not really. So same thing. Smart money is long natty gas. They've been long at much, much higher prices for a long time. Finally filled the gap in here. This gap is filled. Now, this is the kind of security where you take a lot of shots on the long side. Take a bunch of little nicks. Don't lose a lot of money here. But when this trade goes, the bounce will be pretty sharp and severe. The dollar. The dollar one day when the Draghi and the ECB did not increase QE, it gave up an entire month of gains in one day. So huge down days like this from near a high, they generally are not reversed right away. So I would not be surprised if for the next 2 to 6 weeks the dollar trades inside this candle, maybe a little bit lower, builds a base, and then in 2016 we begin to march higher again. This is a really nasty day to recover from anytime soon. But I'm still very bullish long-term, intermediate term. What happened to the euro on Thursday? It had a huge rally, which, interestingly, smart money was at record levels of long heading into Thursday. I mean, smart money's been long the euro for this decline. So, a huge day on Thursday. I don't think the euro is done going up. but it's a rally that I would sell into, I wouldn't buy. And as you know, my feelings are the same about the yen. The yen can rally and close this gap. I keep saying sell it. I don't even know what to sell it with, but you can keep selling the yen. Sell till you run out of other people's money. The loonie, oh my God. You know, with oil buried, it's hard for the loonie to really rally. That's what you're looking at right now. Okay. We did currencies, we did everything but the grains and the tropicals. Let me pause for look at question window. Give me 1 second. Mark, am I strong on the dollar? I've been trading the Swiss franc, but now trading the euro since it's moving again. Let's see. Swissy. I think, as I recall, Mark, smart money on the Swissy is also at record longs. So I would think similar to the euro, the Swiss is going higher as well. I don't think Thursday was the peak. We probably go higher. Let's work off the incredibly oversold condition, and then you can sell it again, let it go down. If you're long, enjoy the ride. You just can't have big stops in. Okay, let's see. So Scott posted a funny comment about even the CEO of Mobile makes comments that natty gas is never going up again. That's, it's funny. When we hear those things, that's usually the time, the window, the 4-week window, when a commodity or when a stock or a market reverses. When even the insiders say it's going to be a long time before whatever goes back up again. Let's see. Do I see a divergence in natty gas? Let's see. There's definitely a divergence. Who's this? Mark? No, Jason. Definitely a divergence. There you go. Price goes down. Indicator goes up. Definitely a divergence there. Would you change your mind when if the dollar has no, Johanna? I've been long. As long as you've been here, I've been bullish the dollar. I've been bullish the dollar since March of 08. It's going to take an awful lot to get me off my theme for a variety of long-term reasons. I see the next crisis coming from the dollar being so overly strong. We're not even close. I think dollar gets to 115, 120, then we can start talking about the end of the bull market, the dollar. But no, I am really still bullish the dollar. Is the weakness in JNK? Let's go to JNK in a minute, John, and we'll talk about that. Argument for higher banks is rate rise and generally higher. Mike, I'm not sure I understand your question. The argument for higher banks is rate raise and generally higher. I mean, the argument for banks is multifold. One is in a zero interest rate environment, their net interest margins are squeezed, so they'll be able to make more money from interest. That's one. Two, you should start seeing M&A in the regional bank space. And I like the stock market anyway. So there's 3 reasons that I like the banks look good. Oh, sorry. Somebody asked about the divergence in natty gas, and I pulled up the Swissy. Here we go. You have you really don't have a divergence in natty gas. Here's your low. Here's your low. I wouldn't call this a divergence. No, kind of sloppy. Okay, so let's go to wheat, which hard to get excited about wheat right here. No, we had a nice reversal on Thursday. Gun to my head, I'd say wheat does go higher, but it's hard to start dancing around that. We're taking off the upside. Corn looks better, but I just don't like this bottom. Don't love this. And all these things with the dollar being weak short term should be good for gold, should be good for energy, should be good for all the commodities. It's just not yet. And the whole commodity index is scraping all-time lows, even as the dollar got crushed on Thursday. That is not favorable. And here's beans. So beans is the one that I've been on for a couple of weeks because of this low. I love that low. That's the low I want to buy, right there. All-time lows, closes higher on the day. And that's a beautiful looking chart. Sugar, we're talking about short. We've been talking about being short sugar for a couple of weeks. Smart money is really short sugar. Having trouble at the highs, you've got a huge reversal candle here and another reversal candle on Friday. So for my seat, sugar is definitely a short up here. Cotton, which has been very difficult and really sloppy. I have no interest in playing cotton on the long side. I'd rather be flat or do nothing. Cocoa, same thing there. Price action is okay. Nothing really to speak of. I'm probably neutral on that. And finally, coffee. Smart money is long coffee, but this does not look like the pillar of health here. So I don't have a strong opinion on coffee. Tracy wants DBA. It's hard to get excited, Tracy, with this kind of look, right? None of them. That's DBA. Here's DBC. They just don't look that good. They look like any kind of significant bounce, you short them for another move to new lows. RJA. What the heck is RJA? What's RJA? See, now it says nothing. NYSC. Let me try to pull it up again. See if I get it. See, that's amazing. I don't know why eSignal is doing that. It didn't give me the right name until I had to pull up the second time. Oh, this is Jimmy Rogers Commodity Index. Yeah, I don't think it looks any different than the rest of them. Nothing to speak of, in my view. Yep. Other questions, comments, concerns? As I am fading fast. But at least I kept you guys from watching Obama's speech. I have no idea what it was. Oh, my wife doesn't want to travel anywhere now. Oh, I didn't go with bonds. Thank you, Johanna. Good job. All right. So here's the AD line. Nothing to speak of. There's nothing to glean from this. Zero. Junk bonds, just death. I mean, this looks terrible. So I'm at my buddy's house tonight for Shiva. Jews sit Shiva, which means you go over and you eat again, and then you kind of tell stories and laugh. And I was telling a story about somebody asked me about a story that they heard, so I got very animated, and I said, the moral of the story was that dead guys can't talk, and then I yelled it out, and then all of a sudden everybody looks at me because obviously my friend has passed away, and I shouldn't have been yelling out dead guys, whatever. So Paul being inappropriate. Here is J&K. It's beaten down badly. It is on the verge of dying. It should rally. No, if it's gonna rally, it should rally tomorrow. But it just does not inspire any confidence. This is just not good. Plain vanilla funds don't look a whole lot better. So okay. Let's see, junior minors. My eyes are burning. I'm here are the junior minors. They're kind of the same as GDX. They look a little bit better than the GDX. I like this pattern a little bit better than GDX. If I had to choose, and you say, what would you do? I want to buy them into a couple percent pullback. And then, what did somebody ask about? Jung? What's the natural? What's JNUG? Leverage ETF? See, again, look, it says NASD up here. Watch this. Now I go back to something else. And now it gives me, oh, this is directions like 3 times leveraged. You guys are nuts playing these 2 and 3 times leveraged things. I gotta write a report on these one day, sooner than later. I'd rather play the unleveraged ones. You have better staying power. Think we get tax laws selling through the end of the year, JN? I don't think the end of the year, JN. There is a trend when tax law selling wraps up. I don't think it's here yet. Scott. I heard banks are holding a lot of energy debt. Yeah, I mentioned that many weeks, John. That the problem with junk bonds. I mean, we'll pull up HYG or J&K, doesn't matter. Is that one? There's 500, $700 billion in energy junk bonds. And they're collapsing. 2, you got a refi problem because all these companies have to refi their debt next year. I heard anywhere from $200 to $400 billion to refi debt. Well, they have bonds yielding. They were paying, I don't know, 4 or 5, 6% interest. Now they got to refi them at 7, 8, 9, 10. So imagine what that does to your budget. There's a big problem brewing in junk bonds. But from this, maybe there's a little mini crisis in junk bonds, but from this, there is going to be one heck of a trade to make. Low volatility, low drawdown, where you buy them and you hold them for 6 to 10 months, and you can make, on an unleveraged basis with very low volatility, you could probably pull in, 8, 10% in short order. But we're not there yet. But yeah, I'm really worried about the junk bonds. Anything else? I smell an allergy pill coming and some water and no alcohol. That was the one smart thing I did this weekend. I did not drink a ton. I think the whole bat mitzvah party last night, 3 hours, I may have had 5 drinks. Maybe. Thanks, Greg. Scott, did I have TV this week? That's a good question. I don't think I planned any TV this week, Scott. And actually, did I do anything? No, I think I did something for a week from Monday. A week from tomorrow, I think I have something in the city. Does the volatility of 12.2 and 12.3 hint at a bigger move coming? Nick, I don't think it means a whole lot. I mean, looking at the VIX, we're in so non-volatile times. Look at the VIX, 15, and it could barely pick its head up. So I don't think those 2 days are a harbinger of things to come. Although once we begin to raise rates, one of the consequences of higher rates is going to be higher vol, which means a higher VIX. So that's for next year. I just don't think it's because of Wednesday and Thursday. And last call. Any other questions? Okay, guys. If you celebrate Hanukkah like we do, happy Hanukkah. If you don't, Christmas is coming up really soon. Do I think AMJ will go down with the rate hike, Johanna? I don't think the rate hike matters for AMJ. It's strictly dependent on oil. So you should ask, is oil going to go down if the Fed hikes rates? I think oil probably rallies on a rate hike. I think whatever happens into a rate hike on the 16th, you can fade coming out of it. If stocks rally hard into it, then you can go the opposite way. I would love to see us pull back into a rate hike, and then we ramp up right into year end from the 16th. All right. So that's it for me. Thank you all for coming. And God willing, we will be back next Sunday night? December 13th. All right. We will see you next Sunday night. Have a great week.
All right, I'm here. You don't have to text me.